Hello and welcome to Macro Mondays presented by the Gokhstein News Network. I'm your host, Landy, and today is October 6th, 2025, and we are looking at Bitcoin on the weekly time frame right now. And in fact, I think some of this needs to be adjusted a little bit. Give me just a moment here. There we go. And, Bitcoin made a new all-time high. We haven't seen full-on expansion to the upside, but we have seen about $126,000 on the high, 126, almost 300 here on the daily for the Monday session. And last week, over the weekend, we actually did make a new all-time high. Now, I don't like when we get moves like that over a weekend coming into a Monday. Usually we see some fills on the short side from CME. And then as price goes a little bit higher, we see CME continuing to fill the short side. And then we'll see a little bit of a spot unwind to bring price back down to get fills in on the long side on a trip back down. But we do see that, the weekly closed very, very strong. Last week's candle, after settling in and locking in that lower high, sweeping the prior weekly highs on a close down towards the weekly higher low. Now, again, this was a weekly higher low. This was a complex high. The swing trend was down, but this was a weekly higher low close. And then, of course, price did sweep down towards that area through the prior weekly higher high over here, thus locking in that closing lower high, which was, a deviation of trend in this case, we can see now. And we got all the criteria that we wanted to see. We saw that weekly close open coming into last week above the 112 swing high of the prior range here, and this nice little downward move before the breakout. You could call it a flag if you want. And a beautiful, beautiful move right back to the top side. Close well above the prior closes of the highs up here at around that 119,465 to 120, depending on your chart. And we saw the highs get run. Now, you're probably going to see a lot of bearish sentiment with just running the highs, but there's still a full week to go. And even if things do correct from here, we are seeing some encouraging signs. The daily is a little overheated, and I'll talk about what structure what structure I'd like to see play out for the bulls in this case. But shorts have no cover here, so it's really going to come down to is that institutional bid and that spot driven rally, do we start really seeing heavy profit taking that starts to round price down and give shorts some room and a little bit of cover overhead here? Other than that, I've talked about the macro fib extension area just overhead at 128 to 130. If we go out to the monthly here and pull the prior cycle fib, you'll see that right overhead, we have that 1414 or 41.4% above the prior cycle high, sitting right here at $128,000 to $130,000, depending on your chart. I would give it room. And quite honestly, even if we see a move up there, I need to see a close above to really start looking at expansion to deeper targets. I would say about $130,000, and we can look mid 130s to 140. And in this case, the main reason why is this is a prior cycle fib pull. And if we take the last monthly higher high to higher low, and this upsets a lot of Elliott wave traders and Gann traders when I do this, but it works. And it's worked for a very long time. I've been doing this for a long time. And the same confluent area off of the prior higher high to higher low structure, that being the 109 the 109,360, I believe it was. Yeah, 109,360 to 74,420.69. We also have a confluent 1414, 41.4% above that 109,360 up here at the 128 to $130,000. So we have a confluent area of interest. And I'm actually going to keep this extension on for the monthly, because if we do start to close above 130, 128 to 130, I wouldn't say on a daily, but I would be looking for like a weekly to follow through for expansion up to the 1.618 in this case, which is going to be about 138 to 140. And that would be the next big area to look out for overhead. And, wicks can kind of land anywhere in price discovery. So this is just kind of rough guides. But we can also pair this with our with our bands to get the areas of interest overhead on the monthly. And, just above here, we have the upper second standard deviation coming in around 129. The closer that price gets during the monthly to that upper second, it's going to push around 130,000. And closing the end of the month above there would signify that we're likely going to go and test the mid 130s to this 1618 at 138 to 140. Now, there is criteria. Bitcoin needs to hold up and the key areas to the downside, especially when looking at the weekly. So when looking at the weekly here, you'll see that the upper first standard deviation, to keep this, we're now kicking off a bit of expansion. We didn't see a close above the upper second in last week's candle. This week, we have run the upper second standard deviation, which is right around $126,000, give or take how close price is to it during the weekly candles. It does ever so slightly oscillate with price action during the candle session. And more importantly, though, to the downside for more immediate continuation, you want to see Bitcoin hanging out about around that 119 to 121 structurally on any kind of daily pullbacks for more immediate expansion back to the top side with opportunity up to that 128 to 130. That would look really good, especially on weekly closes above that 119.5, 119.6 area. And anywhere below there, then we're looking back to, you can see there is a 1.168 right around the midline, right around the point of control, just below there, coming in about 116.5, 116.6. That's also a big daily area that I've talked about between 116 and 118. And of course, bullish on this above the basis band on the weekly here, which is coming in around 113 to 113.5. And I'm going to start to dig into this on the daily here in just a moment. But what we need to see now for the weekly is a weekly close above the prior high here at 124.5. That can also close above that upper second standard deviation. If we haven't already pushed up to 128 to 130, then we likely would, even if it was just on a swing basis. But we would likely see that and more up to the mid 130s. Now we're talking about closes. Right now, the upper third is at 132. But if Bitcoin stays above the upper first, especially, we'll see this go towards the mid 130s and then eventually up to 138 to 140. And the big thing to understand about this is we don't just want to see a close above the high. We want to see a close above the upper second standard deviation for the bulls here to kick off weekly volatility expansion. And this is coming straight off the lows. This is a big deal, and straight off the basis band in an expansive posture. So if the bulls follow through to the upside on the weekly candle, whether it be, and especially hanging out above the upper first, you have to excuse me. I've been doing a lot of talking between different events today and then meetings and stuff. But look, it's going to be a big move. Weekly volatility expansion. We've gotten that move off of the hidden bull div there. That is the move. We've seen it now back to the highs, and it's about continuation from there. But this is a big move loading up. The last time that we had a big move loading up was when we were compressing and then starting to lose the lows here. So we were compressing at the highs. We lost the lows, went down and made we started to kick off expansion towards that lower second and then get the expansion and then ran it right back to the opposite side here. And this was in February coming into March, and then of course April, the big April Six Sigma event Q1 to Q2 transition that I was talking about in 2024, Q3 and Q4. I was really focused on that Q1 to Q2 being an area of interest for a larger correction, and we did get that. Now it's about, are we going to see the expansion to the upside? What I will say about this prior structure was we were coming off of expansion into compression. This would be the start of of an expansion like over here, which was coming off of the 74, 420, 69, where we were going into compression and then got the expansion, the initial big expansion, and then went back into a compression, slight expansion. So in this case, we saw an expansion up, and this wouldn't be the big expansion. This is very, very compressed and coming off of the lows here of volatility. And it's direction neutral, but it does indicate that we're going to see a very high volatility period likely sooner than later, and it might just be kicking off here, and the way that it would do that is above the upper second standard deviation or below the lower second standard deviation is when it would kick off in earnest. And below the lower second standard deviation is right here at a prior weekly level, which is right at that 101 essentially, and that would be 786 of that prior range, 109 360 to 74 420 69. So the bulls have their work cut out for them here, but the bears have very little cover. It's all about the spot side of the trade right now. We're running a spot premium. This was a spot driven rally off of a major weekly level. Derivatives are playing catch up. And that's something maybe we'll check on Wednesday, but it's very important to kind of understand the context here. And we are, we do have some juice left to squeeze here on the daily to the upside. I know that doesn't seem like it's possible. We've got now we've got 6 green candles, possibly a 7th coming up here. If the Tuesday session is green, that's a lot of candles with only a little bit of a break off the lows here. 2 candles, 3 candles into that low being set on the daily. But this also, it's very important to understand that this is also a big area of interest on a move back down would be an area of interest to find a higher low, because we had this uptrend off of the sweep of this daily before the breakout of 112. We saw that 107, 108 sweep just below that big weekly zone at 109 to 112. We saw an uptrend and then a trend break, and then a trend break right back off of that weekly. And you see that we didn't get any close below that 109 level, that weekly level on a closing basis. So really nice defense of that area, and of course, right back to the top side to trend break and stave off a potential reversal setup, and then take the highs. Well, from here we need to see uptrending structure come about, right? So it's all about the last lower low, which is all the way down here at 109 on a close, and that 108 650 or so on a swing. And it's very highly likely that we will see a higher low from here. And then it's all about continuation above wherever this high comes in. And I know I stressed that on Friday, but I want to really point that out. So don't be surprised if we get pullbacks. Bullish pullback's going to be, sticking to this zone. Really bullish on the daily above 121, 121 and a half. That would be a nice area to come and test. But all the way down to, that 19.5, 120 area. Now on the daily, there is, it's a little bit higher here, but could it dip 19.5? Yeah, I call it 120 to 121. You might recall that when I said 121, if we see closes above there, we're going to run the high side zone with the potential to run higher. Well, we've got that already. So that has been fulfilled. The next big area is just going to be that 128 to 130. What I will say is if price does pull back into this zone, somewhere around 121 and a half to call it 19 and a half, 119 and a half, about a $2,000 range there. If it stays bullish in that area and does pop back up, beware that the upper second standard deviation of this expansion is likely going to govern the top side of price action. That does mean that close over close, it'll continue to sweep up and around, and that's where we could potentially see the 128 to 130. But I would say there's probably going to be a correction before heading on up for much further, the mid 130s to 138 to 140 on the daily at least, if it does do that. Now, unless it just goes straight on through, we're looking just above 130 to possibly, 131.5 or so. I think that's a little bit lower likelihood. I think either consolidation or correction to come back to support and grab some liquidity is more likely, but definitely to come back and put in some higher low structure from here is the more statistically likely outcome. Maybe not right from here. Maybe it does try to test up a little bit further, but it does look as though it's got a little bit of juice left to squeeze, but it might be we're likely going to see some daily consolidation or correction, maybe even sometime this week, as we do have a pretty hot read, 96 over 90, but it can keep trucking along. There's still juice left to squeeze, like I keep saying. So watch that 128 to 130, and then wherever that upper second standard deviation, if it can get above, great, then it's going to definitely hit it, in my opinion. But beware of it kind of slow trotting, grinding up, and having that upper second standard deviation kind of govern right around that 128, 130 level. And, that's pretty much all I got for Bitcoin right now. Looks good. Now, what I will say is, let's go ahead and get rid of all of this real quick and reference the typical chart that I'm showing you on these videos, and that's going to be our local support and resistance zones of interest. And big thing, right? Like, can it dip down on the daily here? It's grabbing this candle for that weekly, right? The candle closes here, the close open around that 119.5, and that's fair game. I would say that below the 120, though, if it doesn't hold up there, be aware of 118, 116, right? And then we have a confluent weekly area of interest and Bollinger Band level of interest and everything else on the daily and the weekly and everything else right here in that mid 116 area, which, eventually, close over close, this is likely going to start rising up towards the 118 top side. This is kind of the area that, really got to pay attention to on a deeper correction. And, of course, there's daily levels of interest where price was rejected two major times here, one on the downtrend to continue that downtrend. And then again, right here to correct back to the weekly. Third time was the charm to get on through and then push through. And you can see how it's taking things level by level. I do like that we got to close above the all-time high. But because it didn't substantially close above the upper second, it's not immediate continuation signals. So that's why I'm being a little bit more cautious, and we can check in on it on Wednesday. I will say if things were to correct really hard, let's say it comes all the way down through, this 115.7, 116, there is that swing area at 114.750, but then it's all about where things were getting rejected before. And this isn't a level that I have defined on the chart here, but, it's worth throwing a daily level of interest line here at 113.5, because that would be the next big area is 113.5 below 114.750, especially on any close. If it hasn't already run 113.5, it's kind of between 113.5 on the highs, where we had a couple of rejections, a push through, and then a rejection with a lower high swing down to test that weekly. I'd be looking at that 113.5 to 112 as a big area of interest. That'd be an extreme move, but this was also an extreme move to the upside. I think this is definitely set up for a higher low, wherever the high comes in, and continuation to go and test 128 to 130 is in the cards here. It's still available to the bulls. So I wouldn't necessarily be surprised if this got hit, but it is looking like, might be due for a little bit of a pullback to support. We'll see what the market desires through the Tuesday session. I'll follow up with you on Wednesday. And the main reason I say that is we're not quite done with this move just yet, but we'll see kind of how this Tuesday candle goes, because if it is a red candle, if it is a bearish candle, we're likely looking at maybe a little bit of consolidation to a correction on the daily. We do have, like I said, I'm looking for structure to be built in a higher low fashion. We do have, a hot read on BBWP, which is the volatility metric. We do have a pretty hot read, but again, on a Stochh momentum indicator, which is a regular Stochh, not a Stochh RSI. This is measuring price, close over close price momentum. But this is getting, close to being right on top of price action. Could be crossing over soon. 12 hours already looking for a little bit of a cool down. You can see that the 12 hours giving an indication that even in a cool down period, or a consolidation, or a lower term time frame correction, or even a 12-hour correction to put in some higher lows, the upper second is right there at $128,000 to $130,000. So it's going to continue to work its way up there as the bands kind of swoop up, base band catches up, as price, isn't really kind of just green candling on the 12-hour straight up through, but it definitely did it, on the, in terms of large candle bodies. If it does do it, it's going to happen the next day or two. Otherwise, we're looking for a correction. Then we're looking for the bands to kind of swing out and over the 1414 and then come back down and squeeze for the next bigger 12-hour move. 4-hour keeps chugging along. It's set up in a range, and you can see the 4-hour is set up in a beautiful range. So, the 4-hour can get a massive sell-off even down to that 121 to 120 area. As long as it's sticking on the high side of the 121 on closes, it's fine. And to be quite honest, price just walking up it this way, after a reversal off the lows with the expansion, this could very easily go for the highs. And it's still definitely available. It's 4 hours even up right now, and it's consolidating in the context of the bullish half of the band. So as long as it's closing, right now above 123 on 4-hour closes, it's still looking very strong. But if it does start to close below there, look for that correction to possibly head down towards that, 122 to 121 area. If it starts closing below there, we're looking for that, that daily area of interest, 120, and you could take 19.5. That's fair game. And you're looking for it to hold up there if you're bullish. Otherwise, it's going to be a deeper correction down to that 118, 116 area. And then we take it from there. But otherwise, great trading. It's been great trades. I actually took a bunch of trades over the weekend. It was really fun. Even hedging my swing long off the lows here on that weekly. I talked a little bit about that across spaces and here. And, I took some hedges over here, in the first tap, and took, little scalps over the weekend. It's been quite fun. I actually stayed out of it on Monday because I, much bigger fish in the pond. But, that's all I got for you today. I was going to take a look at maybe Bitcoin dominance. Bitcoin dominance on the daily. I mentioned the daily could correct, but the weekly looks like it wants to straight up reverse. Seeing the daily just kind of grind its way up here. It could start to correct soon, but man, this weekly for Bitcoin dominance is coming off like a major area, and the lows. Mean reversion, like I said, you don't want to see back above 60%, if you're looking for any kind of alt season anytime soon. What you're looking for is a daily correction. Let alts catch up, which I'm going to check in on Wednesday. We're just going to quickly look at price here. We're near the top side. We need to be more towards 48 to really go test the all-time high for Ethereum. So if you do see that in the Tuesday session, that would be great. Likely seeing Bitcoin dominance pull back a little bit more. Solana is the other one, tapped on 250, but needs to get above, start closing there to run the highs, 295, 300, and go on a march. But they're all very close. So all it takes is a little bit of patience and see if they can make it. Otherwise, if Bitcoin corrects and they correct with it, well, probably looking at Bitcoin dominance rising. All right, that's going to be it for me today. I hope you all had a wonderful weekend. I hope you have a wonderful week ahead and a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.